Scott Bessent, U.S. Treasury Secretary, recently advised President Trump to reconsider firing Fed Chair Powell. This counsel aims to prevent market disruption amid the volatile 2025 environment. Maintaining Powell's leadership aligns with a strong economy and positive Bitcoin Fed sentiment. Surprisingly, the Federal Reserve is already eyeing 2 rate cuts this year to support growth. The implications for Bitcoin Fed dynamics and broader crypto markets could be profound if Fed stability continues. Why does Fed chair stability matter for Bitcoin Fed traders and investors? Historically, talks of dismissing a Fed chair triggered significant market volatility and uncertainty for digital assets. Bitcoin, currently valued at $117,938 with a $2.3 trillion market cap, remains highly sensitive to Federal Reserve policy signals. Abrupt leadership changes could ripple across DeFi protocols and staking yields, affecting overall Bitcoin stability. This underscores why Bessent's caution is so significant. The Treasury Secretary's perspective emphasizes ongoing economic strength and positive reactions to current BTC monetary policy. Market watchers should note no confirmed shifts in leadership, preserving predictability. Such stability reduces the risk of regulatory clampdowns or a Fed crypto crackdown, impacting blockchain-based financial systems. Understanding this context helps crypto enthusiasts navigate the complex interplay between centralized monetary policy and decentralized finance. Now, consider the Federal Reserve's potential rate cuts. Lower Bitcoin Fed interest rates often spur investment in riskier assets like Bitcoin, driving demand and price appreciation. This could intensify bullish momentum across the crypto market, including altcoins with solid fundamentals. But rate changes also influence fiat currency strength, impacting Bitcoin inflation, purchasing power, and overall dynamics. Staying attuned to these Bitcoin interest rates remains critical for active crypto traders and institutional investors alike. Let's discuss legal ramifications when firing a Fed chair prematurely. Bessent warns that dismissing Jerome Powell could unleash complex legal battles, further destabilizing financial markets. This risk adds uncertainty, potentially detrimental to Bitcoin Fed market confidence. For Bitcoin holders seeking long-term growth, clarity in Federal Reserve leadership improves forecastability. This point is crucial when evaluating Bitcoin Fed market impact and timing entries or exits. Technically, Bitcoin's dominance currently stands at 60.70%, showing resilient market share despite minor price fluctuations. The interplay between Bitcoin Fed policies and Bitcoin's hash rate, a measure of network security, may seem distant but is closely intertwined. Confidence in monetary stability encourages broader adoption and investment in Bitcoin mining infrastructure. I personally trade on a rock-solid crypto exchange boasting consistently ultra-low fees. Its deep liquidity ensures instant order fills, plus lightning-fast withdrawals keep funds flexible. Tap the special link in the description below today and unlock exclusive sign-up rewards. Therefore, combined Fed rate cuts and chairperson stability can indirectly boost Bitcoin yield and technological robustness. The article highlights Scott Bessent's decidedly conservative stance against aggressive Fed crypto policy intervention. Contrasting with voices pushing for drastic action, this approach favors market predictability. For crypto traders, predictable Fed behavior reduces volatility spikes, enabling more strategic DeFi staking and yield farming decisions. How investors respond to these cues can shape momentum in decentralized exchanges and liquidity pools over coming months. Now consider a crucial question: how will Bitcoin Fed markets react if the Fed unexpectedly fires Powell despite warnings? Historically, uncertainty around Fed leadership triggers sharp sell-offs in traditional markets, often mirrored in crypto. Since Bitcoin acts as a hedge against fiat instability and rising Bitcoin inflation concerns, an initial dip might be followed by increased demand. Understanding this dynamic helps viewers anticipate both risk and opportunity amid turbulent macroeconomic news. Stay tuned as deeper analysis unpacks these scenarios. Crypto market participants should watch for any signals embedded in the Fed's ongoing communications. Hints about timing or magnitude of rate cuts will impact Bitcoin's short-term price trajectory. Such insights assist traders practicing technical analysis, combining on-chain metrics with macroeconomic data. Comment below if you want a detailed breakdown of what these Bitcoin Fed signals mean for your crypto portfolio strategy. Market stability, fueled by steady Federal Reserve leadership, benefits blockchain innovation and institutional adoption alike. Investors focused on DeFi platforms, NFT markets, and emerging Layer 2 solutions appreciate an uninterrupted monetary policy environment. It paves the way for consistent growth without abrupt regulatory shocks or a crypto banking Fed liquidity crunch, supporting crypto's evolving ecosystem. This connection further highlights why Powell's role remains pivotal in 2025. If you're serious about crypto investing, closely monitor Fed developments alongside Bitcoin Fed market data. As of July 20th, 2025, Bitcoin's slight price changes suggest cautious optimism among traders. Upcoming Fed decisions could accelerate momentum or introduce volatility. Staying informed empowers you to adjust strategies proactively through spot trading, derivatives, or long-term holding. Don't miss crucial updates impacting your crypto assets. Engage with this content by liking and subscribing for timely Bitcoin Fed market insights. Share your views on the Fed's influence over Bitcoin and what it means for your trading approach. This community thrives on informed discussion around pivotal macro factors shaping digital currency trends. Your participation helps create a smarter, more adaptive audience ready for the crypto future. In summary, Scott Bessent's advice to retain Fed Chair Powell aims to safeguard economic and crypto market stability. Potential Fed rate cuts suggest a dovish stance that could boost Bitcoin's appeal as an alternative asset. Avoiding legal complications and market shockwaves benefits all financial sectors. I personally trade on a rock-solid crypto exchange boasting consistently ultra-low fees. Its deep liquidity ensures instant order fills, plus lightning-fast withdrawals keep funds flexible. Tap the special link in the description below today and unlock exclusive sign-up rewards. Watching carefully how Federal Reserve digital currency initiatives, Bitcoin regulation, and the Fed balance sheet unfold throughout 2025 will likely define Bitcoin Fed price trajectory and overall crypto ecosystem resilience.